Hello, everyone, and welcome to today's webcast reviewing HIVE Digital Technologies financial results for the fiscal year ended March 30th, 2024. On slide number 2, I would like to briefly note disclosures. Except for statements of historical fact, this presentation contains forward-looking information within the meaning of the applicable Canadian and U.S. securities regulations. These forward-looking statements are based on expectations, estimates, and assumptions as of the date of this presentation. On the next slide, I'm pleased to introduce today's presenters: Frank Holmes, Executive Chairman, Aydin Kilic, President and CEO, and Darcy Daubaras, Chief Financial Officer. I would now like to hand the presentation over to Mr. Frank Holmes for a macro recap of the quarter. Frank?
Thank you, everyone. I wish to give you a quick macro recap of capital markets, accounting, our results, and the granularity, the details, I'm going to leave to our CFO, Darcy Daubaras, who's probably the longest lasting CFO in the crypto mining industry of consistency, and has been through the first halving and the second halving successfully. And Aydin Kilic, who will talk as our CEO, he will give you much more detail on the impact on the difference as accounting. But basically, what's most important is that we continue to have operating income that's positive even after this halving. And we're very thrilled that we've been able to do it from the first halving we've experienced as the first crypto mining company in the world to go public in September 2017. And then Ethereum to go away and disappear at the same time. We now have our second halving, and we've weathered through the storm. So let's talk about the big picture right now and look at the next slide. I always like to talk about the DNA of volatility. Investors have to understand that different asset classes, based on their maturity, on external risks, and most often it's the external risk, not internal risks, that create this volatility of countries and stocks and industries. And the S&P on a daily basis basically says it's a non-event 70% of the time for the S&P to go up or down 1%, and over 10 days it's 2%. Gold is 1% over 1 day, and over 10 days is 3%. And when you go to Bitcoin, you literally go up fourfold in 10-day volatility from the S&P 500. So daily, it's doubled. It's 2% up or down as a non-event. 10 days is 8%, and that's quite big. And when we come to the stocks themselves, you can see NVIDIA, it has a much greater volatility over 1 day. It's the same as Tesla, and over 10 days, it expands to 9 and 11%. HIVE is over 1 day as a non-event to go up or down 5%, just like MicroStrategy, but over 10 days, HIVE can go up or down 19%, and now MicroStrategy has a 10-day volatility of plus or minus 21%. So you can see these differences, and I think the last time we reported on this, HIVE was the most volatile over 10 days, and MicroStrategy is now taken to another level, but they've also made some incredible moves in building this epic size hodl position. And it was great to see Dell is all of a sudden embracing this idea, this concept of putting on your balance sheet. And HIVE has always done that. Ever since our initial takeover of a reverse takeover to go public in September 2017, we've been hodling cryptocurrency. Well, we're proud. We're coming up to the Olympics, and we're proud about having so many firsts, like Bolt is always bolting here. The fastest man in the sprint in the world. And we were the first to go public on the TSX Vancouver, September 2017. We were the first to buy our own data centers and expand and build them on them. We're the first to balance the electrical grid in Sweden. We're the first to develop our own ASIC mining rig with Intel. We're the first to be green energy focused. And we're the first to have an AI strategy with GPU chips. HIVE is about green energy and sustainability. And that's what I believe greatly and significantly differentiates us from our peers. focused in Canada, Iceland, and Sweden. We've been pioneers in the recycling of molecules of electricity. We heat a building in Montreal 5 times our size from the same molecule that was used to mine Bitcoin. So we're very proud of being thought leaders and actually creating the leadership in the technology sector. HIVE has been able to maintain a relatively tight float when you compare it to the massive dilution that has happened with our peers. When you take a look at issued and outstanding basic common shares as of March 31st, I'm amazed that yes, people have raised more capital than us, but it's not free, and it's been at a huge cost of dilution that over time will start to show up on the value metrics per share. And my experience in the capital markets is that it will show up when the quants really start to analyze one mining company versus the other of who has the real value proposition on a per share basis, not top line growth and bottom line growth as a macro number, but what are those metrics on a per share basis? Next, please. Bitcoin and HIVE will outperform gold and the S&P 500. Now, this is going with a 15-month run. HIVE has put on a wonderful sprint in the past 4 weeks when we look at the data points. But as an asset class, even though it's more volatile, it's done a great job in outperforming the S&P 500 and spot gold, which really shocks a lot of people because they focus so much on that short-term volatility, not how is HIVE done in a diversified portfolio. Bitcoin's volatility is nearing historical low levels, and this has always happened in the capital markets. When Tesla became part of the S&P 500, its volatility dropped dramatically. We saw this with gold in 2004 with the growth of the GLD, which was the first bullion ETF. And now we're seeing with Bitcoin, with the creation of the ETF, that the volatility over shorter periods of time will change. Long-term supply and demand factors will be most significant when looking at Bitcoin as a currency or commodity. But when you look at the stocks, it's different value metrics. And what is the revenue growth on a per share basis? What is the EBITDA growth on a per share basis? What are those multiples? And I think as we gone through this halving, that over the next 6 months, we're probably going to see a reset button on the value drivers on a per share basis when it comes to the miners. And I'm giving you this sort of opinion based on my 40 years of experience with the world of gold and with the bullion GLD being launched and how it changed the valuation metrics for gold stocks. In the press release, which you've all read, I think it's important to recognize the differences between US versus Canadian accounting rules. The reason why I bring this up is because Canada was first to have crypto mining companies. First was HIVE, and immediately sort of emulating copying the model of HIVE was Hut 8. And then we had Riot in the US. And it's interesting to see that journey that now I think there's 24 Bitcoin mining companies. And the majority of them are in the US. So that when you do that relative comparison, different accounting does create changes. And it's just actually trying to recognize that what is the nuance, what are the nuances in accounting reporting of the IFRS accounting versus GAAP. And once you find the international financial reporting standards and the generally accepted accounting principles in the US, GAAP, which is both frameworks, major accounting frameworks globally, well, they both basically aim to provide transparent and comparable financial reporting. There are several key differences and nuances between them. And I think that's really important that when you look at HIVE versus US companies who are reporting on GAAP, rules, there are big changes, and Darcy and Iden are going to give you more granularity on those changes. I think that in particular is the way things are reported on mark to market. It can have a significant difference. Next, please. When we come to GAAP in the U.S., it is more rules based. It includes detailed rules and guidelines for virtually every accounting scenario. And this results in less flexibility and provides more specific guidance, which can reduce the level of judgment needed and enhance consistency. So the IRFS is a single model, and it provides principle-based 5-step model for recognizing revenue from contracts and customers, and the focus is on the transfer of control of goods and services. So it's just recognizing these differences and nuance. And so how do you actually compare what is unique about HIVE to most of the US peer group? And it was simple when you say, well, we're 100% green energy, and they're not. That's simple. But when it comes to accounting, I think the interpretation of mark to market, of how you mark to market your Bitcoin position on your balance sheet, and depreciation. HIVE has always had an accelerated depreciation, which means that our reported earnings are always going to look less than our peers. But we have found, based on operations and based on the new technology of basic chip cycles, about 2 years, not 4 years. So what that means is that our peers depreciate the acquisition cost of an ASIC chip over 4 years, and we do it 2 years. Well, if you're going to depreciate a $40 million investment over 4 years, that's 10 million a year. It makes it simple, 10 million a year. But with HIVE, it's 20 million a year. So therefore, that charge, that non-cash charge, is going to look like we lost money when it's really accelerated depreciation to better reflect for us in operating the business. I do believe that it has shown up in our efficiency ratios, our uptime ratios, of how we manage our facilities, etc. Next, please. The other part is just recognizing earnings and bottom line earnings, and understanding that operational earnings, cash flow, which is the key for bank financing, and it's looking at this way. You have to add investment earnings, realized and unrealized gains and losses from your investments, such as Bitcoin total position, or investments in DeFi, which go down, go back up, and they can have sort of what's called realized and unrealized. And with GAAP, you're going to see this, how it flows through is different. And I think that's important for investors to recognize. And I believe we're going to walk you through this scenario that if we did apply be unaudited GAAP rules, how well HIVE has done is really quite impressive on a relative basis. Next, please. Positive corporate margin through the bear market. I'm really thrilled to share with you this visual that even with Celsius going bankrupt, Ethereum disappearing, Bankman frying the industry, Bankman-Fried finally getting convicted and going to jail, all those disasters, we were still able to basically squeeze out operating margin, corporate margin. And I think that's a real testament of how conservative we run our balance sheet, with the inherent volatility, the difficulty of the hashing, the global hashing, more competition coming in, meaning that this is particularly before the halving, which was used to be 900 coins a day, now it's 450. But we saw this incredible run up even after the meltdown of Bitcoin going from 60,000 down to 16,000. Fortunately, it climbed back to an all-time high in this past quarter. But for investors to recognize, we've been pretty consistent in generating corporate margin. And you can see this past quarter was a huge rebound with the least amount of dilution of shares being issued compared to our peers. So I'm very thrilled to share with you on a per share basis how well we did. Next, please. So this is a interesting analysis done by an independent consultant, and I think what's for me to share with everyone is that Anthony Power, who works for Compass Mining, was a retired accountant, CPA, that fell in love with this industry and started doing his own work and due diligence. And all of a sudden, he realized that he had a business, and so he started to change overall his passion for the industry and said, "Look, if you want to be ranked and compared against the peers, you're going to have to pay because I have to spend so much additional time because there is a proliferation and growth of so many crypto mining companies." And so one has to go and look at the overall industry in America, in particular, on tax-free bonds, which is $1 trillion business, and corporate bonds. They have what's called an issuer pay model. And the issuer pay model, companies issuing bonds pay rating agencies like S&P and Moody's to evaluate and assign a credit rating to their debt. This model is widely adopted for several reasons. It creates market credibility and consistency, removes a lot of investment banker biases, which are alleged, not that they are is always there, but it's sort of this independent person. And then you have a regulatory compliance the regulatory world is able to oversee, but really for the corporation, it's the cost of capital. So we look at Anthony Powers, what he is doing is like S&P or Moody's, providing a relative ranking to our peers on several different metrics. And I want to walk you through on several of those metrics. And I think that's what's important for you, like Moody's and S&P. They don't tell you to buy bond A over B. They do not recommend that. They just give you what the credit ratings. And in fact, there's many different types of mutual funds and ETFs that will buy only A-rated bonds or B plus bonds, or and that's when you go to buy those particular funds, you recognize that. This is sort of a new industry, and it's good to have this. And what I've found with the capital markets, if you want to get research, all the investment bankers want to do research, they say, but you have to do the ATM with them. That's what they want. And I've said day one that if there's no research coverage, then I just don't think there's a real passion for how well we're doing what we're doing. And what's is interesting is that what we have here is a very driven model. And when we look at Bitcoin mined per exahash per month, Hive does well month in, month out. It's always in the top quartile, and most often in this metric, we are 1, 2, and 3. So I'm pretty proud about this sort of a metric, but it's all independent. He does not recommend to buy or sell any of these companies. He just gives you a snapshot that's very important to recognize. Next, please. This is another metric, and it's looking at revenue by energized hash rate in May of 2024. And I'm thrilled to share with you, we did much better. And several of these companies on the far right side, they have a much bigger market caps than Hive, and their revenue by energized hash rate is lower than ours. So this is a very favorable metric on a relative basis. Next, please. Ranked by utilization in May, we were number 2. So where that means that our utilization was 94%. As you can see, companies that have seem to be a big component of energy in Texas had a lower overall utilization rate, and some of these have a partnership balancing the grid, and that's really positive for the overall crypto industry and the energy. But I'm really happy to share with you that the team has done a phenomenal job. So Bitcoin mining evaluation metrics. HIVE ratio per Bitcoin mined, and basically saying, okay, if you use HIVE as one, who has a much greater valuation? That's basically saying, what is the market cap per Bitcoin mined? And if HIVE is one, is the number as a base, then when you look at some of these other names, the most expensive would be Marathon. It trades at 11 times the valuation for the same Bitcoin that's mined. And then you can see comes in Riot and CleanSpark, who have been darlings in the US for in particular tech funds that want to get exposure to it. And you can see this relative rankings is quite significant in you're paying for a much higher valuation for that same Bitcoin mined. Now, these are all other companies are great management, but it's sort of nuances that happen in the capital markets, and GARP investors are always looking for where do I find the growth at a reasonable price in that industry, and I would biasly say HIVE. Next, please. May BTC sold percent of production. This is an interesting way of looking at what you're doing with your hodl amount. And as you can see, some of the other companies have been building, but HIVE is it's clearly here in the bottom half, bottom quartile. I would say about all the 24 companies, these are all the companies that are paying for the rating services of Anthony Power. And most of the other companies are selling 100% of their production to cover their costs. And this is after the halving. And I'm impressed with what the team has been able to do. This is another perspective that you can see of just analytics of looking at the share price, the total energized hash rate, the operational hash rate in April, planned hash rate, total BTC produced in April, BTC per exahash in April. And it's just a good way to look at relative valuations. And I think that that's what the service that this industry has. And maybe as this industry evolves, that there'll be a ranking and rating by Moody's and S&P. But right now we have to rely on Anthony Power mining and doing these analytics. But what you can see here is our utilization rate is quite high. It's a significant testament to the efficiency of the HIVE team. Well, HIVE's HPT strategy and AI vision for growth. We started off with $250,000 a quarter, got up to $250,000 a month. We've bought H100s. We have them deployed. We are looking for huge opportunities for energy. It's been a big challenge to find green energy, to get size in the Bitcoin mining sector, and it has been a challenge on finding data centers. But we're getting better at analyzing and doing the due diligence on looking at these facilities. So I'm very happy that this sort of growth, this vision is in place, and hopefully by our year end this year that we'll be able to get up to $250,000 a day. It's all hands on deck of doing this, and we're happy that we're throwing off free cash flow from our NVIDIA chips, which we basically earned its money back in mining Ethereum, and now focus on the build out and the AI boom. Well, now I want to turn it over to hardworking Mr. Dynamite, Darcy Taveras, to give us a snapshot of growth in the financials, and then Aiden will come on and give a wrap up of a much more. Both these guys will give you the granularity, especially for the analysts, what they need of looking at the industry. Thank you all for being cheerleaders and supporters of our vision, and staying green and mining and hodling as much Bitcoin as possible. And stay tuned to this station. We have a lot of excitement, growth in the future. Thank you.
Thank you, Frank. As usual, at this point to the presentation, I will be taking you through a snapshot of the period. looking at the most recently completed quarter and some financial indicators. First of all, I'd like to remind our stakeholders that our earnings are comprised of our operational earnings or cash flow, plus our investment earnings, which includes realized and unrealized earnings, which often includes non-cash charges. Moving on to the next slide. So mark-to-market in accounting is a practice that involves adjusting the value of an asset to reflect its value as determined by current market conditions. The market value is determined based on what a company would get for the asset if it was sold at that point in time in the open market. Mark-to-market losses are paper losses generated through an accounting entry rather than the actual sale of a security. The swings in digital assets impact paper profits and losses each quarter. So our Bitcoin digital assets do generate unrealized gains and losses each quarter, depending on the movement in Bitcoin during the period. It is important that investors understand the differences in operating earnings or losses, in addition to mark-to-market paper gains and losses each quarter. Non-cash charges is a write-down or accounting expense that does not involve the cash payment. These are items like depreciation, amortization, depletion, stock-based compensation, and asset impairments when those happen. And these are common that reduce our earnings, but not our cash flows. Moving on to the next slide. During this most recently completed quarter of March 31st, 2024, we recorded 36.9 million of revenue and 16.2 million profit in adjusted EBITDA, driven by a production of 658 Bitcoin equivalent mined and increased Bitcoin prices during the quarter. On the next slide, you can see we continue to be proud, having a very healthy balance sheet. Our cash position stood at 9.7 million at March 31st, 2024, along with an additional 161.6 million in digital currencies, comprised almost entirely of Bitcoin. This digital currency position is over double from our position at the end of the previous quarter, driven mostly by the increase in Bitcoin prices. We also had 6.9 million in amounts receivable and prepaids, a decrease from the prior period. The total market value of our strategic investments stayed steady during the period at 7.0 million. We maintain a strong net cash position and healthy working capital to fund our operations and growth objectives. With a current ratio, which is our current assets divided by our current liabilities, of 6.8, which is extremely strong. Next slide, please. Switching gears and taking a look at our gross operating margin on a year-over-year basis, comparing the fourth quarter versus the fourth quarter, our gross operating margin, which equates to our total revenues minus direct operating and maintenance costs, increased in absolute dollars to 16.3 million, or 44%, in the most recent quarter, compared to 4.1 million, or 22%, in the prior year comparative quarter. Gross mining margin is also partially dependent on various external network factors, including the high mining difficulty we are experiencing, the amount of digital currency rewards miners receive, and market price of the digital currencies at the time of mining, which were on average higher than the prior comparative period. In this most recent completed year, we are reporting a net loss of 57 cents per share compared to a net loss of $2.85 per share reported in the March 31st, 2023 last year. Now, to note, the net loss reported by HIVE is done using our regulatory requirement of IFRS, or International Financial Reporting Standards, as opposed to US GAAP, which quite a few of our competitors use. One of the main differences between IFRS and US GAAP is the treatment of revaluation gains on digital currencies. US GAAP allows these gains to be included in earnings per share calculations, which IFRS does not. If HIVE used US GAAP and included these gains, our earnings per share calculations, those gains for the year were 77.3 million. So taking those into account, if we were using US GAAP, that adjustment would result in our earnings per share being 29 cents per share profit, as opposed to the loss that we are required to report under IFRS. Moving on to the next slide, taking a look at our year-over-year revenue, we generated total revenue in the fourth quarter of fiscal 2024 of 36.9 million versus 18.2 million in the previous year fourth quarter. The increase in revenues versus the same quarter in fiscal 2023 can be attributable mostly to the average Bitcoin price, which is double what it was last year, even with the ever-increasing Bitcoin difficulty hash rates over the past year. As mentioned previously, our gross mining margin, which equates to our revenues minus direct operating and maintenance costs, increased in absolute dollars to 16.3 million in the most recent quarter compared to 4.1 million in the prior year comparative. Turning to the next slide, comparing our current fiscal Q4 quarter to the previous Q3 quarter, we generated revenue in this fourth quarter of fiscal 2024 of 36.9 million versus 31.3 million in the previous quarter. The increase in revenues versus the prior quarter was impacted by an increase in the price of Bitcoin. Our gross operating margin, also in absolute dollars, increased to 16.3 million in the most recent quarter compared to 11.3 million in the prior quarter comparative. The increase in gross mining margin versus the prior quarter was positively impacted by the increase in the price of Bitcoin in this quarter. Looking at our financial metrics on the next slide, our adjusted EBITDA in this fourth quarter of fiscal 2024 was 16.2 million versus an adjusted EBITDA of 17.4 million in the prior quarter. I will highlight again that adjusted EBITDA is a non-IFRS figure. In the fourth quarter of fiscal 2024, we experienced a loss of 3.5 million compared to a loss of 7 million in the prior quarter. At this time, I want to thank our loyal stakeholders and turning the presentation over to our President and CEO, Aydin Kilic, for an executive update. Aydin?
All right, Darcy, thank you for that summary. I think it's been a strong year and a great quarter. So let's just zoom out and look at an operational view of what we've accomplished at HIVE. So in the last 12 months, our fiscal year, we mined over 3,100 Bitcoin with clean and green energy. So you've seen difficulty substantively increase, effectively almost doubling in that period. Nevertheless, we maintained consistent production through the year. And it's worth noting in the first quarter of 2024, while our production was a little bit lower than the winter, it's because we were upgrading our existing fleet to not grow our exahash, but rather to increase our efficiency, right? And we did that strategically going into the halving so we could approach our target 25 joules a terahash efficiency. More on that later, next slide. Over the last 3 years, you could see our revenue here in millions and our gross mining margin. So the bear market, we made it through that, and we mined profitably through those bear market, again, having, high uptime, strong efficiency, low G&A, just really pound for pound. I believe HIVE is one of the best miners in the industry. And now things are on the uptick, And by the way, we navigated the Celsius bankruptcy, the Ethereum merge, FTX bankruptcy when Bitcoin hit 16,000. And we still look at those green bars. We still mine profitably, even in the worst throes of the bear market. And now this quarter, 16 million of gross mining margin, which is fantastic. Next slide. This is that same data, just with a bit more granularity. So you can see that things here are really on the uptick. This really covers the last year and a half. So again, coming out of the last few quarters, strong uptick in gross operating margin of $16.3 million. And by the way, quarter over quarter, our G&A is usually about 3.2 million, right? So if you want to look at how much money are we making as an operating business, including G&A, you could take any one of these numbers here and subtract 3.2 million. And so fundamentally, we make money as a business on a cash basis. I know Darcy did a great job of covering everything on IFRS accounting principles, but when you strip up, because we have subsidiaries and there's all these, non-cash items and mark-to-market, etc. When you just look at our gross mining margin, subtract our corporate G&A, right? We still make money as a business, which is fantastic in my opinion. Next slide, please. Now, on a quarter-over-quarter basis, this is the Bitcoin production. So you do see this data is similar to what we showed on a monthly, but this actually shows you, 6 quarters. So what I actually wanted to emphasize on this slide is that difficulty has grown by almost 100% in this period, and quarter over quarter increased 22%, right? So even though difficulty had been steadily increasing over these last 6 quarters, our production was quite steady and in fact grew into the 800 Bitcoin a quarter range. And by the way, this is all post Ethereum merge. And, again, in this last quarter, while there was less Bitcoin mined overall relative to the last quarter, our fleet efficiency improved, and therefore we had a great gross operating margin. Next slide, please. Now, I wanted to just shine a little bit of light on this. Frank commented, it's very interesting. So HIVE being the first public crypto miner ever, we're a Vancouver head office company. Our home exchange is the TSXV. Yeah, we're on NASDAQ. Yeah, we're on the Frankfurt Stock Exchange. But there's a key difference I want to illustrate here. A lot of our peers have US GAAP accounting treatment, and we do not. We're under IFRS because that's accounting treatment for Canada. Potato, potato. I'm an engineer. I'm not an accountant, so I feel more comfortable commenting on this. It's just a different treatment, right? Same business, different treatment. We could literally, and I think some of our peers, I think Hut 8 now does US GAAP, even though they started in Canada, allows you to realize digital currency revaluation on your income statement, right? I'm going to say that again. Digital currency revaluation can be realized on your income statement if you follow US GAAP. Now on ours, because we're IFRS, it shows net loss of 51 million. But if you show our digital revaluation, which is 77 million, by the way, that's the center bar, our net income goes up to 25 million. And so when you look at an earnings per share, it's usually done on the net income. On our financials, you can see this $25 million figure, but that comes in, quote unquote, below the line, and that's called comprehensive income. But again, if we were doing US GAAP, we'd actually have 28 cents earnings per share. So I just wanted to point that out. And so that way, for the analysts and all the shareholders out there, if you want to do an apples to apples, you're better off looking at the comprehensive income comparing to a lot of our peers' net income. So let's hop to the next slide. EBITDA is another helpful way to compare our peers. Adjusted EBITDA strips out non-cash charges such as share-based comp. Sometimes you'll have tax provisions, which are non-cash items, and derivative liabilities. So the adjusted EBITDA is a good way to do a fairly apples to apples comparison amongst our peers. So again, rock solid quarter, 16 million adjusted EBITDA, previous quarter 17 million. EBITDA is up quarter over quarter as well. But if you look at that for the entire year, next slide, you could see that our adjusted EBITDA was 37 million and our EBITDA was 25 million, which is very similar to that comprehensive income figure I gave you earlier. So it was a solid year for HIVE. You know, and I'm going to point this out for a second here. You look at, we're trading at roughly 300 million market cap. We have over 150 million of Bitcoin on the balance sheet, right? We have over 2,400 Bitcoin on the balance sheet. So that pegs our enterprise value at maybe 100 or 130 million, right? So on an adjusted EBITDA basis, we're not even trading at 4x, right? And we're not talking 1 year forward. This is our adjusted EBITDA for the last 12 months. So I think HIVE is an amazing value proposition. We're well undervalued amongst our peers right now. Let's look at that next slide. And here it is spelled out, getting a very accurate enterprise value, looking at cash, debt, and value of Bitcoin holdings. And this is market cap as of June 20th, 2024. And so you'll see that the enterprise value relative to our EBITDA, and by the way, this is quarterly EBITDA now, I just want to clarify, right? So this is a quarterly adjusted EBITDA of 16.2 million. You could see that we're trading at a 3.3 multiple, by far the lowest multiple in our industry. You see our peers 12, 14, 20, 38x the adjusted EBITDA multiple. So HIVE is an absolute bargain right now, and we've got solid fundamentals, profitable business, positive corporate margin even after G&A. Let's look at the next slide, please. And so as we found ourselves re-rated based on a multiple of revenue, we were quite curious to see how our revenue multiple looks compared to our peers. And again, we've got the best value in the industry by a long shot, 1.4x enterprise value to our annualized revenue. Our peers, 4, 5, 6, 7, 8, even 9 times on a revenue basis. And so, you know, it really makes me think, if a company is going to be re-rated based on a multiple of revenue, that might make sense if they already are trading at a really high multiple, but we're trading at a bargain. It doesn't matter how you slice it. I think this, and I say this confidently, it's clear, HIVE is the best bargain in the space, bar none. And we're a great operator. We've got amazing operational efficiency and uptime, great fleet efficiency coming out of the halving. And we'll talk more about that in a moment. Next slide, please. So what we've also looked at is the next 12 months. So we know that a lot of the analysts will have their projections and revenue and adjusted EBITDA for the next 12 months. And so running that same analysis, you see here that we're again trading at a bargain relative to our peers. So we've got 5.5x, and some of our peers are trading at 10, 15, 20x. So again, no matter how you slice it, we are the best bargain in the industry. Next slide. On a earnings per share basis, right? This is for the quarter, right? Earlier we were going over the year. So 18 cents earnings per share on adjusted EBITDA basis for the quarter, which stacks up very respectably against our peers. And keep in mind, our shares are trading at $3 right now. Some of our peers are trading at $10 or $20. So, you know, do you want 18 cents a share yield on a $3 stock, or 18 cents a share yield on a $20 stock? So the other point is that we have the tightest float in the industry, 88 million shares out. And this is in an industry where the average is 243 million shares out. So we've accomplished this all with the least amount of dilution in the industry as well. Next slide, please. Upgrading our fleet, you know, we've got 1,000 S21 Pros that we announced recently, and our recent order of S21s, our June batch, is getting upgraded S21 Pros for free. So that's exciting. So again, this is this is all within our existing data center, and we've been upgrading the older 38 joule per terahash machines so that our fleet efficiency is 25 joules a terahash, and our target operational efficiency is 5.5 exahash overall, which is putting us in a great position post-halving where we're able to mine profitably. Next slide, please. You can see here a little bit of post-halving commentary. So we actually mined in May 119 coins, which is actually a little more than half of what we mined in April. Again, we've had our S21s coming in and, you know, averaging about 4 coins a day, right? With Bitcoin where it's at, it's, you know, it's over $250,000 a day in revenue. We're operating profitably even post-halving, and I'm very proud to say this. And we worked really hard to do this to upgrade our fleet, to keep our energy costs down. We've always kept our lean G&A, and to make sure that on an operating income basis, we're still making money as a company post-halving, which again, we did with little to no dilution. Let's look at that next slide. Here's the real kicker. We actually grew our HODL month over month. And you look at obviously our year end was 2287. We actually managed to increase our HODL in May, right? So if you look at our May production report, it was 2,451, right? We almost increased our HODL by almost 200 Bitcoin in the last 2 months. And we're talking post-halving. So I'm incredibly proud of my team. You know, I work closely with Darcy and Frank. We've got a rigorous treasury management program, as well as selectively selling Bitcoin. And again, you know, just being very prudent and conservative with our share treasury. You know, we haven't done these big dilutive bought deals in the industry. There's always that money if you want to dilute, but it's the path less taken. It requires more fiscal discipline, but we managed to pull it off. So lowest dilution, growing our HODL, profitable post-halving, best value in the entire industry, bar none, no matter which way you slice it. Adjusted EBITDA, revenue, 12 months forward, you name it. Next slide, please. Just a quick summary of the May production press release. Again, we covered the 119 Bitcoin, ended May with 5 exahash, and again, well on our way to our 25 joule per terahash efficiency. Next slide, please. So on top of all that, we also have our AI business, which has obviously been a really exciting part of the Hive story. I know Frank covered it. So we're well on our way. You know, we had this 4-step vision board, 250K a quarter, 250K a month. Well, this last quarter, we did 1.8 million in our HPC business. So that puts us right between step 2 and 3, trending upwards. Yeah, so more on that now. We are just giving the market just a little glimpse, and we have some exciting things in store as we work on building out this business. Stay tuned for more updates from Hive. Next slide. Please check all our socials. We've got a very active Twitter, and of course our press release to find out the latest and greatest of what's happening at HIVE Digital Technologies. My name is Aydin Kilic, President and CEO, and I look forward to speaking with you. If you have any questions one-on-one, please arrange a meeting. Thank you and have a great day.